Hey Credit Warriors, Credit Shifu here, and this is one of those sorts of videos that I do towards the end of the year. We are going to be talking about my investment goals for 2020, all right? So yeah, let's get right into it. So number one is my house. Well, I think everyone knows that I bought a house this year. Of course, it's a primary residence. Now, this might be controversial because, of course, if you read Rich Dad, Poor Dad, Robert Kiyosaki says that a house is a liability, not an investment. Well, I kind of view it as both. I think it can be an investment or it also can be a liability. It really depends sort of how you use it and what aspect you're looking at. So let's just, first of all, I'll tell you the situation with my house. So I put down a down payment of $48,000 for a $245,000 house. So I put down just about 20%. So I have a mortgage. It's $1,600 a month when you include obviously the principal, interest, and then you have the property taxes and the insurance. Comes to about $1,600. Now, if you look at, wait a minute, where is it? I got it for you here. This document, okay, my lawyer, he described this as a scary document that lists every payment that you're going to have to make for the next 30 years until 2049. And yeah, basically that's what's in it. It's got a sheet that literally has every single mortgage payment I'm going to have to make, unless I voluntarily pay it off early, of course, from now until 2049. I'm just trying to find the page or the pages to show it to you. All right, here it is. Yeah. So, whoa, I almost dropped it. Okay, so basically what I have, what I pay right now, my first payment ever of my mortgage, I paid $258 in principal and $735 in interest. And that's the way it starts at the beginning. Basically, they start by having interest be the larger portion, about 3 times the principal. And actually what happens is it changes by $1 per month. So the first month was $258. Second month was $259 I paid in principal, and the mortgage interest goes down. First month it was $735, second month it was $734, and it basically goes like this until it flips. And towards the end of your mortgage, the principal takes the lion's share and the interest takes the smaller share, okay? Obviously doing it this way benefits the bank, they get their money earlier. So yeah, that's just kind of the way it works. Now, my mortgage is at a really low rate. It's 4.5%. Now that's historically low. When I say really low, I mean historically, because obviously now there are actually quite a bit lower rates than 4.5%. I sort of got it as mortgage rates peaked earlier this year, and then they started coming down again after I'd applied. So it could be possible to refinance it in the future and get a lower rate, but I only bought it a few months ago, so I just kind of want to have a rest first before I think about doing anything like that. So one of the reasons I view it as an investment is because you have to live somewhere. I'd be renting anyway, probably spending a similar amount. I was spending $1,400 back close to New York City. I'm spending $1,600 now, but for a much bigger place. So, at least a portion of my, mortgage payment is going towards principal and is, remaining mine, okay? And now, in addition to that, I'm getting appreciation. So when I bought the house, Zillow seemed to think that the house would increase by 7% in 1 year. That's now gone up to 12%. Apparently houses in my zip code are increasing by 12% per year, okay, which is quite good actually, compared to the overall market in the country. And my house has already increased in value by $5,000, woohoo, since I bought it. So it's gone up from $245,000 to $250,000. Of course, that's the Zestimate, so who knows, really? Who knows if you'd really get it for that, be able to sell it for that? Maybe you could. Obviously, I bought it for $245,000. Maybe I could sell it for $250,000, but I wouldn't make any money on it. I need to wait a few more years for it to increase a bit more. So really, it's just an on-paper profit, but it is cool. And obviously, over the years, if it goes up by 7 or even 12% per year, you're both getting equity and appreciation. So in that way, it's an investment. There's another way it's an investment as well, and that is the deductions you can get. So you can deduct mortgage interest. You've got the SALT deduction, state and local taxes. I'll probably max that out actually to $10,000 this year because I'm paying $7,000 in property taxes, and then on top of that, I'm sure in state taxes I'll pay more than $3,000. So I'll definitely max it out. The limit is $10,000 since the new Trump tax plan came in. And then you've also got home office deduction, which well, last time I checked, it is an office and it's in my home, so it's a home office, and things like that. So from those three kind of perspectives, it's an investment. From the liability perspective, well, the big thing is that it's kind of something that ties you down. So you have to pay taxes on it. If you don't pay those taxes, the government can seize your home. If you don't pay the mortgage, the bank can seize your home. Screw you. So it does have a liability aspect to it as well. But as long as you keep everything in order, manage your finances well, I would still view it as an asset in many senses. All right, let's move on to my second investment for the year 2020. Number 2, the stock market. Yes, so you guys probably know, I was in stocks. I was doing quite a lot of stock market investing, long-term value investing over the last 3 or 4 years. I did take out a huge amount of money from my account. You can see it sort of just drops right there. I took it all the way down to about 5,000 or 6,000 on my main account. I got a few other accounts in there. That's why it shows a higher thing, IRA and stuff. So anyway, I do want to get back into the stock market. I actually, had stopped buying stocks for a while I bought my house and all the costs associated with that. But last month I did start, buying more stocks again. So actually the first one I bought into after my little hiatus was Uber. I started buying Uber stock at $28. Uber, I view it kind of similar to Facebook in a way. Facebook debuted on the stock market, it IPO'd at $38, and it quickly dropped down. It reached a low of $18, which is, approximately around half its IPO price. And then after a year, it finally surpassed $38 again, and it was basically up from then on, okay? Now Uber, it IPO'd at around 45. It's now down. I think the lowest it went, maybe it was 25. Correct me if I'm wrong. Anyway, I bought it at 28. Which is about half. And so, will it behave the same way as Facebook? Well, I think there are certain indicators that point that it may do. There are certain similarities with the company. Facebook had a huge network of users, but it wasn't thoroughly monetized, when it first IPO'd. So they have, made a big effort to monetize their users, bringing in sponsored posts, ads, all that kind of stuff. And I feel like the same thing could happen with Uber. They've got a huge network of users and drivers. And obviously, in a way, they're monetized because those people pay for rides. But there are so many other ways in which they could monetize those users, all right? They all have the app on their phone. You can send them notifications. You can send them emails. I'm just waiting until Uber starts moving into, doing, obviously they already have Uber Eats, but delivery of other stuff, like Amazon does. You may have some sort of Uber store, various products that they sell, stuff that you can buy in the car and you pay through the app while you're riding. And then there's the whole thing with driverless cars that they're bringing in, which is probably going to cut their costs. Terrible for the drivers, really. Yeah, that will cut your costs. I think not everyone would want a driverless car, though. I quite like chatting with a driver sometimes. But anyway, I certainly think they have a lot more ways to monetize their user base. So I think they, definitely after that period of a year after the IPO, once it settles down, they're definitely going up. I feel like this could be the sort of stock you could 5x your money within the next decade or even more. Obviously, nothing is set in stone. It's always, a chance, but I feel there is the possibility for that explosive growth, that Facebook style growth with this stock if they can sort out monetizing their user base. But anyway, just in general, I'm going to be buying back into the stock market, quite a lot of money each month. And partly I'll be contributing to my IRA, $6,000 per year allowance, which gets you a tax deduction. So it'll save me probably like $2,000 or so in taxes. Then in addition to that, I will be saving up for my next investment. Number 3, a rental property. So in the year 2020, I really want to buy my first rental property. I went to Meet Kevin's, training day, his seminar in New York City. If you don't know Meet Kevin, it's a YouTube channel. He's kind of similar to Graham Stephan, but he's more focused on real estate, much more focused on real estate. Graham does a lot of other personal finance videos as well. Meet Kevin is very much more focused on real estate. He has a course on real estate investing. I haven't bought the course yet. I just went to his daily seminar, but once I get closer to, actually buying my rental property, I probably will buy his course. So yeah, I recommend anyone, check him out, check out his channel, give him some love. But anyway, I'm looking at buying my first rental property next year. Now with rental properties, the The thing a lot of people like to do is called house hacking, where you buy a duplex or a triplex or a quadruplex. Is that a word? Anyway, between 1 and 4 units. If you live in one of the units, you can still get the personal financing on the 30-year fixed rate mortgage at a lower interest rate, personal interest rates, if you buy more than 4 units, or if you buy 4 units, less than 4 units, but you don't live in it, you're going to go with like a commercial rate, right? So people do this thing called house hacking, where they live in one unit, rent out the other units, and basically they can live for free or even cash flow on top of that. I'm not going to be able to do that. We have kids. We don't really want to share a house with, you know, strangers or whatever, even though they're in separate apartments. I don't even want to share a backyard with them. I just want my kids to be, you know, in our private home. But I am still thinking of buying a duplex. I've talked to some other investors in the market in the larger town near where I live. Basically buying a duplex because the taxes here are quite high. The price of a duplex is not generally double the price of a single family. It's a little bit more expensive, but it's nowhere near double. Whereas the rents that you're going to bring in from a 2-unit house is definitely closer to double that of a 1-unit than the overall price of the actual property is. So it's more optimized. You're paying really less tax per unit than you would pay with a single family. So it's more likely that the property can cash flow. Of course, you have to, you know, I still need to research the market a little bit more. And I need to get a good realtor, because a good realtor can get you the good deals, because a lot of people have said to me, you need to try and get these houses before they come onto the public market. Try and get them earlier. You can get a good deal. A lot of investors are snapping up these deals. So you need a realtor who has connections and who can identify deals and stuff before it really hits the market. So anyway, that's what I'm hoping to do. I'm hoping to buy a rental property towards the end of next year, I would say. This is part of my plan. Basically, I want to retire, or have the option of retiring by age 40. So that's in 6 years' time. I'm 34 now. I won't necessarily retire. I mean, I love making videos, but I just want to have the option of it so that I have total freedom, total financial freedom. Maybe we don't call it retiring, just financial freedom by 40. So my idea is to make as much money off YouTube as I can, and then plow that all into rental properties and the stock market, and see if I can get a large amount of passive income coming in off those two things, you know, by the time I'm 40, a large enough amount to support myself, or at least all these sort of base expenses of life, and the money I earn on top of that is what I use for having fun and reinvesting, okay? And obviously buying my own personal primary residence was the first step in that, because I need to buy my own place before I start buying other places to rent out. All right, guys, so those are my investing goals for 2020. Write your investing goals below. I'd really love to hear about them. And if you are into investing in the stock market, we have a little promotion for Webull. They are doing, for December, you can get 2 free stocks. The first one for signing up to $500 in value, and the second one up to $1,400 in value, as long as you deposit $100 in the account. And obviously remember, that's still your money. You're not giving that away. It's just shifting it into another account. I do recommend it as a great app for doing stock investing, swing trading, and that kind of thing. The charts on Webull, much better than Robinhood. Robinhood is kind of for beginners. This is definitely for intermediates, has a lot more information in it. And you know, a beginner could use it too, but it just has a lot more room for growth. So I do thoroughly recommend Webull. If you want 2 free stocks, click the link below. Do check it out. Available for iPhone and Android. Don't forget to leave your comments about your investing strategies and your ideas and goals for next year below. And I wish everyone a Merry Christmas, Happy New Year. Thanks for watching. Please subscribe if you're new. Bye-bye.